All right, welcome back. We are beginning the day with positive cues. The global cues were solid. FIs have been buying for 7 straight days, and the SGX Nifty is also indicating that we're headed for a positive start. But let's talk about a lot of things in the market and some stocks to look at as well. Britannia is the first stock on our radar. Very good performance coming through. So definitely you're not going to say 50-50 for this one, Mangalam?
I will say more of a Jim Jam for Britannia this time around because the tastiest part is in the center. If you just take a look at their EBITDA, 800 crores versus street expectations of 705 crores. So they more than made up for a mild miss that we saw in their revenues. The revenues of the company posted was 4,023 crores versus expectations of 4,050 crores. As a result of which the net profit also 557 crores. Most on the street were working with a number sub 500 odd crores. What led to this deliciousness in the middle? It was the gross margins that expanded 700 basis points year on year, 120 basis points quarter on quarter, and they are at an all-time high. The company says that this is the band that they will be working with in FY24 itself. The domestic volume growth just came in at 1%, so that's one fact which was below street expectations. But the company is clarified on that. That's because the biscuits became smaller as compared to last year, and at the same time, the pack size grew by about 12%. So the number of packs that sold were 12% higher. The other good factor was that the non-biscuit portfolio of the company grew by about 1.5 times. And Varun Berry has been reappointed for the next 5 years. So that indicates some stability at the top too.
Okay, all right. Mangalam, thanks a lot for that. Well, I'm focusing on Coal India. The numbers came in on a Sunday afternoon and the numbers were mixed actually. On the top line, it was a beat. So there were a few positives out there as well. Top line beat because the other operating income was up by close to around 9% on a sequential basis as well as year-on-year basis. And realizations were actually better than what the street was working with. It came in closer to around 1,880 rupees. That's around 50 rupees higher than what Nuvoma, for example, was estimating. And the FSA price hikes haven't come about. But yes, FSA prices have moved up. Realizations have moved up by 5% on a year-on-year basis because the focus is on mix. And they could be selling more amount to the non-par segment, which helps them on the realizations front. Now, that's a positive read-through. E-auction prices on expected lines is higher, but sustainability is going to be questioned. The reason for the margin as well as absolute EBITDA miss is because employee costs spiked up to around 17,000 crores. That included provisions for wages of around 5,900 crores odd. Miss on operating profit led to a miss on the profitability front as well. They've declared a dividend of around 4 rupees. So for the year, it's nearly around 24 rupees 50 paise odd. The key trigger, though, for the stock from here on is the FSA price hikes because e-auction prices will dip from here. So we need to wait by for that. That didn't come about. So expect the stock to open up flattish with a mild negative tick. And then maybe we see a bit of a recovery. But Mangalam, coming back to you, what about Marico? How are those numbers?
Well, Marico reported numbers were largely in line with street expectations, and there was never any concern about that anyway because the street was prepared by the company's fourth quarter update. Revenue coming in at 2,240 crores, street working with a number of 2,275 odd crores, EBITDA as well around 400 crores, so largely in line. The net profit was a mild beat, but that was led by higher other income at 68 crores versus 24 crores, so that was explained as well. What was a big positive was the management commentary, where they said that going forward, they expect domestic volume and revenue trajectory to improve. At the same time, gross margins are expected to improve by 200 to 250 basis points. They'll use some of that in increasing ad spends, but EBITDA margins actually going forward should improve by at least 100 basis points. And the other growth drivers of the company, which is foods, premium personal care and digital brands, they expect growth of nearly 33-34% in FY24. That would mean that it is 20% of their overall business as against 15% in FY23.
All right, Mangalam, thanks very much for that. Now let's shift focus to Paytm. There is news flow there, and IndusInd Bank as well. Abhishek has got both those inside. Abhishek, morning.
Morning, Prashant. So to begin with the April business update that Paytm is given, it looks like a soft month for them on a month-on-month basis. So number of loan disbursed is down about 2.5% month-on-month. Value of loan disbursed has actually declined 8% month-on-month and is at 3-month low of 4,115 crores. Gross merchandise value, that's up 33.7% YOY, but a decline of about 0.8% month-on-month. Calculation shows that the average gross merchandise value per MTU is down about 2.94% month-on-month and is lower than that of what you saw in December 2022. So disbursals ticket size is the lowest in the last 4 months, coming in at 10,037 per average disbursals, which is down about 10.15% month-on-month. Q4 performance remains strong. Total income is up 49.5% YOY and about 15% sequentially. The contribution profit margin has expanded to 55%, which continues to help in EBITDA being positive positive as well. So the net loss has declined to about 167.5 crore when compared to 392 crore in the previous quarter and about 762 crores in the same quarter last year. IndusInd Bank, there is a change in the top management. The key chief risk officer has actually resigned. So he'll be moving on to lead risk function at another MNC bank. Mr. Mullidhar Lakara, who has been assigned the new role of head of newly formed assurance functioning, which is reporting to the MD and CEO. He was earlier the chief compliance officer. So over there, they will be replacing him with Sachin Patange. Back to you.
All right, Abhishek, thanks a lot for that. And you were on top of that one as well. Thanks so much for joining and giving us your inputs on a couple of those stocks. But Mangalam, the long-awaited deal was finally announced. That too almost midnight on Friday. ABFRL as well as TCNS. How do you read that?
It was so long awaited that, when it was finally announced, it seemed like a bit of a footnote, Nigel. But it is definitely an announcement that has been made. If you just take a look at the swap ratio, however, it seems like ABFRL got the better end of the stick because the shareholders of TCNS will receive 11 shares of ABFRL for every 6 shares that they hold in TCNS. If you just take a look at the stock prices on Friday, 11 shares of ABFRL would give you about 2,356 odd rupees, whereas 6 shares of TCNS is worth 3,125 rupees. So basically, it values TCNS at around 393 rupees per share, which is lower than even its 52-week low on the stock. And the stock, of course, has seen a 45% correction from the top. So expect TCNS to open sharply in the red today. ABFRL has also gone ahead and announced an open offer for 20% equity at 503 rupees per share, but brokerages are more concerned about their capital allocation policy. So a long tail of acquisitions that ABFRL has done, Motilal Oswal says that are presently loss-making or yet to stabilize. So this prolonged phase of investments for them could actually impact their earnings. This acquisition itself, as per MOSL, could have an 18% impact on their EPS. So they've downgraded the stock with to a neutral rating with a target price of 245 as well. So see a red on both these counters today.
All right, Mangalam, thanks very much for that. Sun Pharma has got news flow as well with their Mohali plant in focus. Ekta has got more details. Ekta, hi.
Thanks for that. Well, yes, I expect Sun Pharma to be in the red because we have managed to access the non-compliance letter which was issued to Sun Pharma's Mohali facility. Now, remember that the news came out some time ago, but we didn't know the details of the non-compliance letter. So they have indicated that, it was this was a part of the consent decree which Mohali was a part of in Jan of 2012. And they have indicated that, there are some concerns with regards to API contamination, etc., which have been brought up in the non-compliance letter. Now, Nomura has written on it. They say that the key concerns seem to be around data handling, data integrity, process control out of specification. Mohali's US sales are estimated to be $100 to $150 million. So they may face disruptions in the near term. There could be a permanent loss of market share while they undertake this remediation because they have to get an expert on board. There will be batch-to-batch certification. So all of this is going to be pushed out for a couple of months. And according to Nomura, the stoppage of supplies of one of their key drugs, which is a colon drug, Pentasa generic, which is expected to be manufactured from this unit, could adversely impact their profit margins in the near term. And that's the reason why you could probably see the stock in the red. That, along with the fact that data integrity concerns have probably been brought up in this particular unit.
Okay, thanks a lot for that. So Sun Pharma could be in the red, non-compliance letter issued to its Mohali plant. I'm sure the street is not going to like that. In any case, in the last 1.5 months, the stock has lost a bit of value, about 5 to 10%. So maybe more downside in store. But the other group of stocks that I'm watching is the Adani stocks. So there will be 2 stocks in focus this morning, Adani Total Gas and Adani Transmission. And I'm going with red over there. The MSCI has updated on the treatment of Adani Group stocks in the May review. They will be reducing a free float in the Adani Transmission and Adani Total Gas stocks. Now, the float reduction, remember, was postponed from the February review to the May review. And as we had told you earlier, there is an estimate from analysts that Adani Total Gas could see an outflow of $90 million, while Adani Transmission could see an outflow of $132 million. So I'm going with red on these 2 stocks. But here's a quick recap of our top stocks with positive news flow. There's Britannia, Marico, Paytm and IndusInd Bank. While stocks with negative news flow this morning, Coal India, Aditya Birla Fashion, TCNS Clothing, Sun Pharma, Adani Gas and Adani Transmission. But let's also get a bit of a handle on what's happening in the world of crude. Crude has made a tad bit of a comeback, after the strong jobs report that we got in the US. Manisha Gupta is joining in for a roundup of all the action there. Hi, Manisha. Good morning.
Morning, Sonia. Thank you for that. Well, yes, we did see crude oil prices gain up by 4% on Friday. But on the week, we were still 7% on the weaker side. And this was a third straight week when the crude oil prices has posted losses. The strong U.S. non-farm payroll data clearly has been supportive. But the new week, brings in many more data points to watch out for. You have the China trade data that's coming in on Tuesday. And then Wednesday is data-heavy day. You have Chinese inflation and the U.S. Consumer Price Index, both of these numbers coming in. So ahead of that, you are witnessing some choppiness. So even as the crude oil prices have come back above $70 a barrel for both the varieties, it is the metal sector which continues to lag. Copper prices are trading at a 4-month lows right now, and the China's premium has now declined because of enough physical availability and lower demand there. Even the iron ore prices have continued to fall, so we're looking at a 5-month lows here. The low demand from China's steel makers and contraction in the manufacturing sector in China and US seems to be weighing onto this price as well.
All right, Manisha, thanks very much for that. So that's crude oil in focus. It's reacting to what's happening to the underlying perception of what's happening to the underlying economy and the jobs number turning things around a little bit. We'll take a quick break here. Prakash Diwan will join in for a chat on the top stocks you need to know and watch out for as we start another day of trade. Later, we'll also have the management of Aether Industries to talk about their fourth quarter and FY23 earnings. Stay tuned. Those conversations are coming up.